All right. All right, let me record this so that I can post it somewhere if you still need it. Okay, now let's go and take a look on how to deal with these questions of ACCA F3 or Financial Accounting FA. All right, the first question says, which of the following calculates a sole trader's net profit for a period? I hope you know about the net profit, right?
Yeah.
Net profit, how do you determine the net profit for the period? How do you know it? How do you get that? How do you get the net profit? Usually, simply speaking, you can open a, you have the figures there, close net assets, drawings, and what? All right, simply speaking, net assets, if you have the opening net assets at the start of the period, right? Opening net assets at the start of the period, then during the period, maybe you can earn some profit, right? So if you add the profit that you have earned during the period, and maybe there is something that you have given out, maybe you have drawn some money for own use. So we can say less drawings, and maybe you don't know, maybe you also introduce some new capital. So you can also say capital introduced. You can add the new capital introduced during the period. Then if you do all that, at the end of the period, you could remain with closing net assets, just like this. All right. But if you take a look at the question, what we are required to do is which of the following calculate the sole trader's net profit for the period? So what they need is this one, this profit, right? So to obtain the profit, you just need to make it the subject. So I could say that, oh, maybe I could take all these to the right side. So I have closing net assets here, and maybe we have opening net assets. So if opening net assets come to the right, it will have to be deducted. So I would say minus opening net assets, and the opening net assets that I see here actually will no longer be there. And then I have drawings. Drawings have been deducted on the left-hand side. So if they go to the right-hand side, they are going to be added, right? So I would remove drawing there, and then I would come to the right-hand side. I would have to add, and then I would have to paste the drawings figure there. And after that, on the left-hand side, I'm left with profit and capital introduced. Now remember that we just need to know the profit expression. So I would have to take the capital introduced, since it is added on the left-hand side, it would come to the right-hand side and then be subtracted, right? So I would say minus capital introduced, and that would be the way of expressing profit in terms of these figures. So if you go and take a look at the answers, I would have closing net assets, of course, A to D is that way. Then I would have less opening net assets. But here, of course, in both situations, open net assets are deducted, so no problem. And then I would have to add the drawings. So if you take A has added the drawings, it's fine. B has deducted, so B is no longer an answer. C has deducted, no longer an answer. So remains only A and D, right? And lastly, you come to capital introduced. Capital introduced should be deducted. A has deducted, but D has added. So obvious and only answer should be A, right? I hope you got that. So A would be our only answer there. So it's just like that. All right, so I hope that is fine. A is our answer. All right, now we can proceed with the next question. All right, how the next question say? The next question say that which of the following explains the interest system of operating petty cash? Now, how do we deal with this interest system of operating petty cash? How do we deal with that? All right. To deal with this, you know that when dealing with the petty cash, you can just say maybe, let's say $500 are given into the system, $500 are provided. So I could say this. I could say at the start, I'm given $500. Let's say I have $500. Maybe in day one, $20 are used. In day two, $80 are used. Until come at the end of the month, maybe 320 additional dollars have been used. So if you take a look at the total amount that has been used, we say that we used 20 and then we used 80. That gives us 100, but also we used 320. This gives us a total of 420, right? So how the Impress system works is we just take a look at $500 was given, but 420 has actually been used. So what we do, we just do the reimbursement. We say we reimburse. We reimburse actually what has been used. We reimburse what has been used. So if we reimburse what has been used, we used 420. So I would add 420 to what was originally existing. Remember that we used 420, but we had 500. So 80 was still in our pocket. So if you add to that 80, you have back your 500. And so it is a system that makes sure that our balance remains as originally intended. Right. You get that? So actually that's the aim. So after having this, you would say, oh, it's cool. So let's go now to the value. It says, which of the following explain the Impress system of operating petty cash? Weekly expenditure cannot exceed a set amount. That's number one. But also the exact amount of expenditure is reimbursed at intervals to maintain a fixed float. Of course, you have to maintain a fixed float. C, all expenditure out of petty cash must be properly authorized. C is obvious, not the answer from how I explained. D, regular amounts of cash are transferred into petty cash at intervals, not regular amounts. We only reimburse something that has been used, right? I hope you got that. And actually, you can proceed with the number 3. Now let's go to question number 3. Number 3 says,